I'm kind of curious where the markets are sitting right now with this recent pullback on the fear and greed index. And interestingly, it finally dipped down to the fear indicator, which for a while there, I think it was neutral the last time we looked at it. Usually, when we get to the extreme fear category, that's when I start getting interested in buying pretty heavily. Because as they say, you should be greedy when others are fearful, and fearful when others are greedy. So excited to see that there could be some buying opportunities coming up.
Can I see that chart on the screen there? That's the one from the, forgive me, what site is that on?
It's listed on CNN's business website.
Right. That's what.
And this is an indicator made by a friend of mine, Jason Meshnick, who's a CMT. He made this many, many years ago, and it's still updated on a daily basis. So this is a really cool tool just to get a sense of a combined set of indicators. It's looking at things like the the S&P 500 close against the 125-day moving average, overall stock price strength, overall breadth, put and call options, overall market volatility as measured by the VIX, safe haven demand, and then there's some junk bond indexes against this as well. So when you combine kind of all of that together, you get this universal view of how the markets are tending to view the market at the moment. And right now we're looking at the fear category.
Awesome. Well, I mean, that leads in straight to the first story I wanted to talk about, which was the stock market and Bitcoin taking a bit of a tumble.
Yep.
It was pretty interesting. I was watching Bitcoin, just marveling at my short, raking in some cash, and then you popped in and you were like, "Hey, what's going on with the Nasdaq?" And I looked, and the futures are down. I know that I've completely become myopic now with crypto. But I always forget there's all kinds of opportunities in the future space.
Mm-hmm.
So I wanted to obviously the big news this week, as far as the tumble is concerned, is that the Fed decided they were going to only cut by 25 basis points. Which, after going through a cycle or two, it's pretty funny to hear it. Right? It's pretty funny to hear this idea that we're all that the markets are losing their minds because they're not going by the insane amount that they were doing before. Remember, 50 basis point cut that we got in September. I think that's the first time, just casually, we got a double rate cut from the Fed.
Mm-hmm.
And already it's sort of like, we're used to it. What do you mean? Now we're getting, I've heard some people call it a half rate cut.
If it's not 50 basis points. Okay, interesting.
That's how quick the market's adapted. So I just wanted to show a quick clip here from the press conference that Jerome had. As always, it's with Fed speak here. And so the idea is it's when he sort of like lets the mask drop a little bit, or sort of drops the whole thing in there, that you have to pay attention to, because everything else, whenever he's looking at his paper and reading directly, okay, you're not getting any real information. You want to hear what he says off the cuff. So listen to what he says right at the beginning here, right after the question.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase, and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report?
So we always try to be careful about not throwing out the numbers we don't like. It's just a occupational hazard is to look. Oh, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
All right. So a couple of things in there, which I find very, very funny. So they were saying that they have to cut back to only cutting by 25 basis points because they're like, we have to be careful about inflation, right? So there's mixed signals over here. All the news articles, all the headlines we've been hearing over the last week have been about how inflation is cooling. I don't know if you've been seeing this, but that's been everywhere. Inflation been cooling.
Yeah.
And at the same time, as you heard in this press conference, they're concerned that inflation hasn't cooled enough, right? And so they're saying we are going to cut it by to 25 basis points, and he calls this restrictive, sufficiently restrictive. Let's just keep that in mind. The restrictive terminology right now is being used for how much of a rate cut we're doing. Okay, so that means they're actually trying to. I suspect they're trying to thread the needle here on the inflation issue, understanding that we might actually get another resurgence. And in fact, he's saying we might even redescribe how we're describing all this. Because if we remember, the inflation that we suffered after the world shutdown was due to supply chain issues, and the incoming Trump administration with tariffs and change and what some might call protectionism can also be almost as significant with the rest of the world as other nations are going into their own recession. So we have the whole production issue abroad. So I'm curious here, Mike, what you're thinking about here. If I had to just throw it to you as far as, is inflation bottoming here, or are we just taking a pause and we're going to head down lower, or are we going to keep on rising, as I suspect? What do you imagine here?
Well, I want to start by saying that if you look at the CME FedWatch tool, which I'll pull this up here to give you a sense of how the markets actually expect the Fed to behave at each one of the meetings. If we go back to the historical chart from December 18th, we can see here that even as far back as October 10th, they were pricing in about an 85% probability of there being a 25 basis point cut. So the futures market has been expecting for nearly 2 months now that that's exactly what the Fed would do. There was some anticipation after the election, of course, that the tariffs would have an impact on inflation going forward. But interestingly, that didn't really change the market's expectation. The election didn't change the market's expectation of there being just a 25 basis point cut instead of a 50 basis point cut. So I think the Fed's behaving in line with market expectations. The restrictive narrative is really around this idea of continued anticipated rise in inflation. And I think that's largely the hawkish narrative that caused the market to pull back.
Right.
If we look at the expected changes in PCE, which is their preferred measure of inflation, I think that expectation is that it's going to rise from here. And so I think what the Fed is trying to do is really kind of forecast out what impact tariffs are going to have on overall PCE, and whether or not continuing to reduce the Fed funds rate at a rapid rate would actually end up having a counterintuitive effect, right? So I think they're trying to continue to lower slowly enough that we still get the control over inflation the way we're hoping, while accounting for this change in administration.